Markets don't work in isolation. They're like a web, interconnected and influenced by geopolitics, central banks, and global events. Today, let's unravel this fascinating story, all from India's perspective. Did you know that the forex market, commodities market, stock market, and debt market are all interconnected? They influence each other in fascinating ways, especially in a country like India. Let's explore this with the story of a steel business. Meet Bharat Steel Ltd, one of India's leading steel manufacturers. Steel is at the heart of construction, infrastructure, and exports, but its fortunes are tied to multiple markets. First, the commodities market. Steel production relies on raw materials like iron ore and coal, which are traded globally. If global prices rise due to increased demand or supply shortages, say from a mining strike, Bharat Steel's production costs soar. But that's not all. Bharat Steel imports coking coal, and these transactions happen in dollars. Here's where the forex market comes in. If the Indian rupee weakens against the dollar, import costs rise, squeezing the company's margins. Next, the stock market. Investors closely watch steel companies like Bharat Steel. If raw material costs increase or profits shrink due to currency fluctuations, the stock price may drop. This affects the wealth of shareholders and even the broader market sentiment. Then there's the debt market. Bharat Steel might borrow money to finance new plants or operations. If India's central bank, the RBI, raises interest rates to control inflation, borrowing becomes expensive. This impacts the company's expansion plans and profitability. Now let's add geopolitics to the mix. Imagine there's a war in a major steel exporting country. Global steel supply drops and prices shoot up. Or central banks in the US and Europe hike interest rates, strengthening their currencies. The rupee weakens, making imports costly for Indian companies. Domestically, politics also play a role. If the Indian government imposes export duties to keep steel prices low locally, Bharat Steel's revenue from exports takes a hit. On the flip side, infrastructure-friendly policies could boost demand and drive profits. See how everything is connected. A shift in one market, whether it's forex, commodities, stocks, or debt, can ripple across all the others. Companies like Bharat Steel are at the center of this web, constantly adapting to global and local changes. For India, these markets are not just about business. They're about growth, jobs, and a stronger economy. Understanding these dynamics helps us see the bigger picture of how global events shape our everyday lives. The same logic is applied to gold and oil as well. 1. Higher oil prices weaken the rupee, increase inflation, and compel the RBI to hike interest rates, which in turn impacts bond yields and stock markets. 2. Geopolitical tensions drive up gold prices, weaken the rupee, and make foreign investors cautious, leading to fluctuations in stocks and the debt market.
Breaking news.
So next time you hear about oil prices, gold prices, interest rate hikes, or global politics, remember they're not just headlines. They're pieces of a puzzle shaping India's economy and markets. That's how markets are interconnected, and geopolitics, central banks, and policies influence them all. If you found this story insightful, don't forget to like, share, and subscribe for more such content. Like, share, and subscribe for more financial stories that